Evening, everyone, or good early AM. I wanted to do this update on this early Wednesday morning, on this Wednesday, August 2nd, 2023, at 12:03 a.m. Eastern Standard Time. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So, we don't know what the we know what the implications are going to be long term, but short term, we don't know what's going to happen here with the US dollar. This is some news that's been breaking over the last several hours. I wanted to share this now so that you guys could see it from me. But the US was stripped of its AAA rating. They downgraded it to AA+. So, US stripped of AAA rating by Fitch, losing a top-tier rank it held since at least 1994. So, Treasury Secretary Janet Yellen responded to the downgrade, calling it arbitrary and outdated. The US was stripped of its top-tier sovereign credit grade by Fitch rating, which means it's going to cost a lot more for taxpayers now, and it's going to be less likely that other nations are going to want to hold government bonds or U.S. bonds, which it comes at a very convenient timing here. As we know, the BRICS are going to announce a gold-backed standard again here, supposedly by the end of August. So the world reserve currency, being the U.S. being the leader with the world reserve currency and the petrodollar, it's coming to an end, ladies and gentlemen, and this is a big, big step towards that. The U.S. was stripped of its top-tier sovereign credit grade by Fitch Ratings, which criticized the country's ballooning fiscal deficits and an erosion of governance that led to repeated debt limit clashes over the past 2 decades. This credit grader cut the U.S. one level from AAA to AA or plus, echoing a move made more than a decade ago by S&P Global Ratings. Tax cuts and new spending initiatives coupled with multiple economic shocks have swelled budget deficits, Fitch said, while medium-term challenges related to rising entitlement costs remain largely unaddressed. The rating downgrade of the United States reflects the expected fiscal deterioration over the next 3 years, a high and growing general government debt burden, and the erosion of governance related to AA and AAA related peers over the last 2 decades, Fitch said in a statement. Treasury Secretary Janet Yellen quickly responded to the downgrade, calling it arbitrary and outdated. Fitch's decision does not change what Americans, investors, and people all around the world already know, that Treasury Secretaries remain the world's preeminent, safe, and liquid asset, or the preeminent, safe, and liquid asset, and that the American economy is fundamentally strong, Yellen said in a statement. She is so out of touch, or they're just trying to intentionally destroy the U.S. economy, because it's embarrassing, that statement. Fitch had warned that it was weighing cutting the nation's credit grade back in May, when Democrat and Republican lawmakers were at odds over trading the nation's borrowing limit, and the U.S. Treasury was only weeks away from running out of cash. While that crisis was ultimately averted, Fitch nonetheless said that the reported debt limit clashes and 11th hour resolution have eroded confidence in the nation's fiscal management. Tuesday's statement also attributed the downgrade to the country's rapidly swelling debt burden, which is forecast to reach 118% of gross domestic product by 2025, more than 2.5 times higher than the AAA median of 39.3%. The rating company provided the debt-to-GDP ratio, or projects the debt-to-GDP ratio to rise even further in the longer term, increasing Americans' vulnerability to future economic shocks, the report said. The Treasury futures Treasury futures pushed higher in the early days of trading after the announcement the cash market was closed. I suspect the market will be in 2 minds about it. At face value, it's a black mark against the U.S.'s reputation and standing, but equally, if it fuels market nervousness and a risk-off move, it could easily see safe haven buying of U.S. Treasuries in the dollar, said David Croy, strategist at Australia New Zealand Banking Group in Wellington. It's finally balanced. So it makes sense why they're trying to go after a $1.1 trillion relief package, basically, you want to call it. The government's trying to print $1.1 trillion, and now it makes perfect sense. The yield on 30-year U.S. debt rose to the highest in almost 9 months Tuesday as the Treasury Department prepared to ramp up issuance of longer-dated securities to fund its widening budget deficit. On Monday, the Treasury increased its net borrowing estimate for the July through September quarter to $1 trillion, more than some analysts expected and well above the $733 billion it had predicted. In early May, the Treasury will review its quarterly financing plans on Wednesday at 8:30 a.m. in Washington. That's about 8.5 hours from now. Washington responds, the move by Fitch now gives the U.S. 2 AA+ credit ratings that could raise a problem for funds or index trading with a AAA-only mandate, opening up the possibility of forced sales for compliance reasons. Moody's Investor Service still rates the U.S. sovereign AAA, it's top grade. Democrats in Congress seized the downgrade to blame, blah, blah, blah. I'm not even going to talk about that because they're trying to act like it was from I'm not even going to go into that. That's a political, I don't go Democrat, Republic, they can say whatever they want. It's my personal opinion. If you believe in either or, you're being played. That's how you make an emotional response. So we do positivity over negativity. We look at the facts, and we're not looking at the FUD. So that's what happened. That's why Janet Yellen, Democrats, Republicans, they can say whatever they want. They've been fiscally irresponsible. And eventually this was going to happen, and it's going to continue to be downgraded until the U.S. is stripped of its right as the maker of the world reserve currency.